Oh man, you join me for a critical CPI reading. Will this inflation report due out in 5 minutes? Will it pump Bitcoin? Will it dump Bitcoin? Bitcoin is sat here on a cliff edge. It started breaking out a couple of days ago. You can see this big breakout candle here. I sent out the warning in my daily TA video saying, guys, just wait. There's not enough volume in here. There's no momentum in here. Could this CPI reading officially be the volume that leads to us bouncing and playing out this pattern, which could give us a move up towards the top of the wedge, towards that 31.5, 31.8 region where we got rejected? Or is it going to be the nail in the coffin? Are we going to get hot inflation, which send us to the downside? I will be seeing the report live in 4 minutes. I will be bringing you guys the reading as it comes in. Just a quick reminder on the expectations. If you're not in my Telegram group, Ijaz.uk/TT, if you're not following me on Twitter, you're not in the loop, guys. Make sure you're there for all the alpha we're dropping on a day-to-day basis. As you tune into this, drop in live, guys. What do you expect CPI to come into? Drop that into the chat. Markets are expecting 3.1% on the headline figure. We also need to check out the month-over-month figure, which is 0.2% expected. And then core 4.8% and 0.2% on the month-over-month, guys. Give me a smash up on the likes if you're joining us on this live stream. We've just got a couple of minutes here before we get into the CPI reading, and I did want to show you that we've got the chart open here. You can see the 5-minute chart here heading towards this yellow line. This yellow line is when we get the data in the next couple of minutes. You can see Bitcoin's rallying into the announcement. So was the Nasdaq, right? The Nasdaq was rallying here to the upside as well, kind of just cooling off here to the downside leading up to the figure. Some of the markets are saying that this might be a nothing burger, that it doesn't matter. We think inflation is going to come down over the next few readings anyway. But the reality is you've got the next meeting, the FOMC meeting, on the September the 20th. The markets are pricing in a pause. So if inflation continues to come in hot, if the labor figure was still showing signs of resilience, which is what we saw, then Jerome Powell's going to keep having excuses to do another 25 base points. So he can keep pushing it down the road and saying, oh, I'm going to do another 25 base points. I want to do another 25 base points. So we'll watch for this. And this normally takes some time to update after the CPI reading. But I want to see if the market changes its mind, because if inflation comes in hot, this may start to price in another 25 base points. We might see this 14% start to climb. And the opposite is true as well. If inflation does cool off more than expected, I expect even more of the market, going up to 90% of the market, pricing in that we will get that pause at the next meeting. So that's what we're playing for here in the next 2 minutes or so. And I will be flicking across to that. Do drop in the comments, guys. Thank you for joining me on the live stream. Do drop into the comments. What are you expecting? Give me a number. 3.1, 3.2, 3.3. What are you expecting? I personally think anything higher than 3.2, 3.3, market's going to be upset. I think market will kind of be, you know, a 3.1 is fine. It'll kind of get away with it. But anything kind of towards the higher end, 3.3, that kind of figure, market's going to lose its mind. More importantly is this core. If we get a shock of this core like 4.95, I think the market's going to be upset, because 4.8 is still high inflation, guys. Like, America's starting to do this victory lap of, oh, we've got inflation under control. Yes, they're doing great progress compared to Europe, but 4.8% on your core inflation is still a risk, okay, guys? So we will switch over to the CPI as and when it goes off. Let's see if I can get some Bloomberg TV action for you guys up here. Let me see if I can do some producing. And let me know if you guys can hear this in the comments, and CPI should be coming in a minute's time. I'm refreshing here, guys, as we're waiting for CPI. Do smash up the likes if you appreciate this type of content. It's so easy for people just to put out moon boy content, but we're putting in the work, guys. We've got to look at CPI. We've got to look at macroeconomics. Then we're going to understand when this market's ready to turn. And when this market's ready to turn, we're going to be in an almighty move to the upside. Not just a Bitcoin halving, but a big loosening of monetary policy. That's what's going to be the big move, guys, that we're excited to see. If you guys have been through this, the fastest rate hiking cycle, you've done well. You've done well, but that's given us the opportunity to have a horribly long bear market where we can accumulate. Okay, so now just waiting for CPI. Let's see if we get it here.
The numbers are in, and the numbers kind of match what was expected. You guys out there forecasting this hit it on the head. CPI 0.2 gain for the month, and CPI core 0.2 gain for the month, with pushes up the headline year-over-year figure to 3.2% and drops the core year-over-year to 4.7% from 4.8%. So as the bond traders would say, this one was on the screws, came in right as forecast. Initial jobless jobless claims. Let's not forget that. This one jumps. We're up to 248,000. The prior week was 227 on an unrevised basis. We'll get the revision in just a second. Those are dropping slowly. But the continuing claims number, 1,684,000, that's down from 1,692. So a little mixed.
Pretty good there, guys. So we got the expectation in terms of the 3.2 on the headline. Fine, markets expecting about 3.1, 3.2 anyway. The core inflation was expected at 4.8. They're coming at 4.7, so nudge slightly to the downside. That's positive. You got your 0.2% month over month, which is this figure, which is good as well. So pretty good here. Pretty good here at expectations. Let's see how markets are responding as well. This is the chart. Oh, big dump there. Look at that, guys. Crazy, crazy, crazy. Big dump leading up into the reading. And then as the reading came out, big move to the upside. Bitcoin moving up here, 29.5. This is interesting. This could be what markets wanted. Again, I think it's going to settle down once the traders have done their thing, because markets were expecting this. To get a crazy pump, it'd have to be much lower than the market was expected. I don't think we've got much lower than it as expected. So I think we're pretty much as we were here in the markets, because it's just what was priced in. So I think the pricing in that we're going to see in terms of us getting a pause will stay about the same. The markets will still expect to pause based on this data in September, so we'll continue to keep that in the same. I think this is just going to be the traders playing out their positions right now, and then we'll see how this settles down in the next couple of hours.
Inflation adjusted weekly earnings, and it is a quiescent number off of a revised 0.7% inflation adjusted a weekly increase down to 0.2%, positive 0.2. So that's the kind of disinflationary tone, and that makes everybody, including the stock market, feel good. Maybe the Teamsters will not make 170,000; they'll make 167,000.
Mike McKee, have you got that super core print? Have you got a read on that just yet?
I don't have the super core just yet, but I can tell you that rent of shelter and rent of primary residence and OER, all those numbers come in at 0.4. So that is about the same in line as it was the prior month. So no great drop in overall numbers. But the owner's equivalent rent comes in up a tenth at 0.5. So that's not going to be seen.
I'm looking over at Mike here with 7 pages of printout here. It's totally impossible. First of all, I can't see it. Your eyes are better than...
Okay, let's park that up there, guys. We pretty much got what we needed there from mainstream media, from the suits. We got the inflation figures as expected. A little bit of a nothing burger, right? We kind of got what we expected, but that's a good thing. We didn't really want something too hot. Yes, it would have been nice to have something really low, like a crazy 2.8 figure. It was never going to happen, right? We saw that energy prices were going up. We saw the effect that could have. So naturally, we've got to see where we're sat here now. Now back to the main chart, right? Which is us looking at this daily chart on Bitcoin. And the question is, can we actually bounce? Can we actually bounce? Because the structure I'm looking at here, you can see this is, of course, a falling triangle. And there's this kind of falling wedge here. When you get a breakout like we did on this candle, you want to see good volumes. And we spoke about that over the last couple of days. I wasn't impressed with that volume. These are decent volume candlesticks, right? Even when we had this candlestick here, we got dumped straight back into our pattern the next candlestick after. So this doesn't convince me just yet. What I would want to see is it going to show a big volume candle? Nice big candle bouncing from the retest, like the arrow I've pretty much got drawn here, right? Come back, retest, and then boom, off it goes. If it does, then great. We could have a little trade action here from roughly where we're at now up to kind of that like 31.5 level, gives you a 6.5% return on spot, taking it up to kind of that 31.8 mark where we got rejected, gets you about to 8% here on spot. Not too shabby as a nice little trade. And if you want to trade this, ijaz.uk/Bybit, you're going to get some amazing bonuses when you do that, up to $30,000 in free bonuses, and you can trade with those bonuses. Now, more longer term, once that plays out, I don't think we've got the permission personally. This is my personal view, of course, do your own research. I don't see a big move just happening now, taking us up towards 45. I feel like this needs to reset more, and I've felt that for a little while. Now, this can, of course, change my mind. If I see a nice big volume candle, and I see really good momentum, see positive macro news coming in, I can change my mind. But where we're sat currently, I'm still feeling like this just wants to have a bigger pullback, right? If we bring this out, take away all these diagrams, bring out our EMA ribbon, you guys know I'm looking for that pullback into that EMA ribbon. It just feels like it needs it. Like last time when we called off, when we got rejected, we came all the way back down here, all the way down to 24.7, right? And we cleared down even to the bottom of our EMA ribbon for a little while. And then we bounced. Even then we didn't have enough momentum to clear. So are you telling me now this is going to be enough halfway? I feel like it needs to come at least to about this area. That's my feeling from the technicals. Now, of course, something fundamental can change it, like a really positive CPI reading today, but we didn't get it. We just got a normal, okay CPI reading, right? It came in as expected. So I don't think that's going to give us the impetus that we want to have a massive move to the upside. That being said, on this weekly chart, if this week finishes in the green and we get another week opening up green the following week with good volumes, then again, on the weekly chart, it looks like we're getting a reversal. But I want to see that. I don't just want to be falling for this. I just want to make sure we're not in this candlestick of this leg to the downside, right? Because we had this candle here, and then we carried on to the downside. Had this candle here, which was a bit of a relief, and then we continued more to the downside. I just want to see, is there more? And if there is more of a retracement here to the downside, I will be topping up positions around that mark. I'm happy to be topping up the closer we get into that EMA ribbon. You guys have known over the last couple of weeks here, I've been waiting for this red rectangle. If it doesn't come, that's fine. I'll still continue to nibble light DCAs. I just do my heavier DCAing in this rectangle. If we want to move from here, great. My long positions are packed and loaded, and I'm ready to go. But I'm just expecting, I've got a gut feeling that we're going to come back into this EMA ribbon for another retest. Apart from that, markets are looking pretty flat, right? If we take a look at the dollar index, you guys know this is the main story. And the positive sign we are getting so far this week, but still some time to go, is that dollar index is being pushed to the downside. And this CPI reading today should help us do that. You can see already today, look at that big red candlestick on the dollar index. Great news. Now push this to the downside. Lose your daily EMA ribbon. That's what we're going to want from the dollar index. Because if we can make it lose its daily EMA ribbon, then we can make it on the weekly chart get rejected from this EMA ribbon and continue in this downwards channel that we're in. The last couple of weeks, the dollar index has been really buoyant. It's been bouncing, but still, it's part of a longer term downward trend. So it's just a relief rally. That's why it makes me understand that Bitcoin's just pulling back, and it's a momentary pullback and gives us an opportunity to DCA. The moment that would change, the moment my thesis would change that Bitcoin's in a deeper pullback, is if Bitcoin loses its weekly EMA ribbon and if the dollar index simultaneously manages to regain its weekly EMA ribbon, okay? So that's when we'll change. If this dollar index gets above the EMA ribbon, if Bitcoin loses its EMA ribbon, then we're getting set for a more major pullback. Then we can shout out figures like 20,000, 18,000, and we can see kind of what the technical levels show us there. But for now, we're in a healthy pullback. It's a good pullback. I'm comfortable with where we're at, and I'm looking for positions to DCA. If we do get a bounce on the short-term charts, I will take that trade. You guys can join me, Ijaz.uk/Bybit if you're looking to trade. Hopefully you guys enjoyed this live stream. If you like this type of content brought to you live as and when the data matters, support this content, smash up the likes. Let's see what questions we've got from you guys in here. I think the numbers are cooked, so who knows? Yeah, they probably are, to be honest. CPI, some people call it CP lie, but the reality is traders play this market, so it affects our trades, it affects everything that we're going for. Jerome Powell uses these artificial numbers to decide his monetary policy, and that's ultimately why it matters, right? Otherwise it doesn't really care. Ijaz, how do you think the resumption of student loan payments next month in America are going to impact things? Let's see how that plays out. It could do, and that's the risk Jerome Powell plays, right? Which is why Jerome Powell may continue to do 25 base points in September, because he may go, hang on, more stimulus coming out, we could just get a bounce back in inflation, and that's not what he's going to want to risk. Right now he's on a tight edge rope. It's not like inflation is just plummeting down. No, it's just edging down slightly. Right? He doesn't want to mess up that balance, and if more stimulus comes into the market, inflation could rear its head again, and we'd be stuck with stubborn 4.8% core inflation. It's a lot. 4.7 just came in now, but 4.7% core inflation. That's a lot to take, and Jerome Powell's going to want to finish the job while he's got the impetus to do so, and that's why we're seeing that. And for the long run, that's positive. I know that means more 5 months, 4 months, 6 months of more pain for us, but long term, that means he can finish inflation, and it just means when he prints and turns the money printer on again, because we know the US love their money printer, it just means that the money printer is going to be on for even longer, which means we get even longer bull market to make those gains. Hopefully you guys enjoyed. Smash the likes, don't forget to subscribe, and I'll see you in the